In this video, I will show you how I would create a portfolio that can generate 15% per year. So you want to invest in strong companies that will produce strong returns. The process will be very simple. You have 4 major steps in the analysis, and I will show you the websites where you can start the analysis. So the goal of this video is to give you a lot of value so you can start creating a portfolio that generates at least 15% per year. I'm not guaranteeing any results, but that's how I would do it. In case this is your first video from this channel, welcome. My name is Christophe Nour. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. The first step of this strategy is to avoid leveraged companies, is to only invest in companies that have no debt at all. They are flooded with cash. That's a very good problem to have, especially now with higher interest rates. If you want to invest in small caps, mid caps, a lot of them will suffer because they have leverage. They will have to pay interest on the debt, and that will drag down the capital allocation policies, and that will be a negative impact on the shareholder returns. So how can you only invest in companies without any debt? I'm sharing my screen here. You see the website called FinChat. This is maybe one of the best websites I use on a daily basis to analyze stocks, to develop new ideas. And you see here I'm on this tab, screener, and you can put any metric you want. I think that's one of the best screener in the world at the moment. So in the investment universe, you can only select the companies without any debt. You go here, screener criteria. Let me put net debt. Net debt. So if this is a plus, a positive, that should mean that you have more debt than cash. So for example, if you put a net debt between 0 and 1,000, you have net debt. So this is not what we want. We want this metric to be negative, right? So let's put a maximum of 0, and minimum, let's put nothing. You know what? Let's put nothing. So minus infinity. That will mean that the net debt is negative. So that's a net cash. Okay. And if I click on the run screener, you will have thousands of results. The maximum of this website is 250 results. So that should be it for the first filter. Quite easy. Regarding the countries, the geography, maybe you only want to focus on the US developed markets. So I can just put here United States. Maybe you can put United Kingdom. Maybe you can put some countries in Europe. I'm from France. You have Germany, Switzerland, Spain. You have some countries over there. But this is depending on your style, right? So okay, now first simple criteria, no debt. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. The second step of the strategy is to invest in businesses that grow. Businesses that will grow in the future, grow their revenue, grow their net income, earnings per share. How do you check if a company will grow in the future? The past is a very good indicator of the future. If you find a company that has grown 10% per year for the past 10 years, it's very likely that they will continue to grow. Maybe not at 10%, but you get my point. And similarly, if you find a company that has not grown for 20 years, magic will not happen. On average, you have some exceptions to the rule, but on average, the past is a very good indicator of the future. So okay, very calmly, you can put revenue CAGR, maybe compound annual growth rate. Here it is. Revenue 10-year CAGR. So on average, what was the growth rate for the revenue? You can put a simple metric like 6%, 7%, 8%. That's fine. And you will find a lot of results because it turns out that you have a lot of such companies in the US. This is the biggest market in the world, obviously. I guarantee you that if I increase this threshold and I put a revenue CAGR of 20%, you will have fewer results, only 157. And if I put a revenue CAGR of 30%, now that's a different game. On fewer than 100 results. Okay, so let's play safely and put 6% for the revenue. Okay, maybe you want to put other growth indicators. You can look at the net income. Net income CAGR. Where is it? Net income 10-year CAGR. That's a different metric. You have the revenue, that's the top line. Any company can grow their revenue and be and show very little profitability. For the 10-year net income CAGR, you want improved efficiency over time. And I would recommend to use a figure above 6%. I mean, above the revenue growth to show some margin improvement over time. You want to invest in businesses that are getting better over time, more efficient over time. So instead of putting 6%, you can put, 8, depending on your time horizon, risk tolerance. How many results do we have? More than 250. Okay, very well. Additionally, you can add another metric. This is for free for this video. 10-year diluted EPS, you can put even more, like 10% earnings per share growth. That would mean that the company is getting more efficient over time and the company is buying back their own shares. You have a share reduction, number of shares reduction, so the EPS is bigger than the net income. And you have 200 results. Okay, that's a good starting base. And for the numbers exactly here, you can play around. I mean, if you want to be more aggressive and you want a business that is growing more, you can increase all these numbers by 2. And instead of having 200 results, you will find much less. 140 results. You can increase the numbers if you prefer. I mean, that's your style. By the way, I'm using this FinChat website. You have a link in my description if you want to try it out. You have a discount like minus 15%, 25%. So you can click the link in the description and enjoy the website. Maybe you have 1 month for free. So just try it out and you will see. I think this strategy can work for small caps, mid caps, large caps. For example, you have Google and Facebook meta platforms that are here. That could be good candidates of businesses that can grow 15% per year. They have done this in the past. Same thing with Intuitive Surgical or Adobe Arista Networks. These are extremely good businesses. So, okay, that was the 2 steps of the analysis, quantitative part. Now, I'm sorry, you won't be able to find this with a screener. You need deeper data analysis here. The third step of the analysis is to focus on companies with operational leverage. What do you mean? How can you check this? Basically, you want the costs of the business to be fixed costs. And as the business is growing, it's getting even more efficient. The margins are going up. For example, you can have some machinery business with a lot of costs, and as the business is getting more scale, you have what is called the economies of scale, advantage of getting bigger and bigger, and the variable costs are not that big. So if you look at the past 10 years of the business is getting stronger, more revenue, more net income, and the margins will increase progressively. And that's a beautiful flywheel. If you happen to find these kind of investments that grow at a healthy pace, like 10% per year, and their margins are growing with time, with scale, you have a beautiful flywheel that can last for years and years and years, and even decades. So you want to find these golden opportunities. You won't find this information of operational leverage on a screener. Or maybe you can, but I don't know how to do it. So if you know how to do it on the screener, please comment below. But you need deeper research. How do you know if a company has operational leverage? You understand the business model. You study the business. For example, you have meta platforms here. They have a lot of scale. They have 3 billion users. What is the cost of running their operations? The servers, the operation, the software, the tool, the agencies that work together, and do they have operational leverage over time? Do their margins increase over time? So maybe a good way to find if a company has operational leverage is to check the EBIT margin of a business and see if it is going up. It has gone up for the past 10 years. And why? You want to check why. So this third step is much more qualitative. You need to know how to do the analysis, and that's great. I mean, I'm doing this business analysis, and you see that if you do this first step, you will dismiss a lot of investment ideas. You will say, oh, no. Because first, you need to understand the business model. Two, this business must be in your circle of competence. Like, you need to know really well if they have an edge or not. And three, you have to ask yourself, do they have operational leverage? Do you really think they have operational leverage? For Salesforce, maybe. I don't know. For ServiceNow, I don't know the company. And if you go down this list, you will see a lot of good companies that will not fit your investment criteria. You need to be comfortable, or you have TPL here. You need to be comfortable with owning this stock. So this first step will be violent because you will dismiss a lot of investment ideas. Out of 150, maybe you will keep 15. You will dismiss 90% of the investment opportunities. Don't worry about it. And the fourth step is also qualitative, is capital allocation. How does management want to reward shareholder, basically? What is their plan to reward shareholders? Do they have incentives that are aligned with yours as a shareholder? And similarly, you can't check this on a screener. You have to do the work, see how is management paid. For example, every year you have a fixed salary and a bonus salary. What are the KPIs to have a bonus if you are a CEO of a company? Maybe the KPIs are based on earnings per share. That's good. Efficiency, that's good. Return on invested capital, that's good. And sometimes the KPIs for the bonus are bad, like adjusted EBITDA or non-GAAP metrics that are completely fake. So you can basically cheat on the bonus. You want to check the integrity of management and focus on these best management teams in the world. Basically, you want to invest in the best management teams with the best incentives that are aligned with yours as a shareholder. You want to check if they have insider ownership in the company. If the CEO owns 10% of the company, of the stock, that's good news. He will do, or he or she will do, anything to boost the stock price over the long term. So that's good news. All his or her net worth is tied to the stock price. What can you check with the capital allocation? Do they do dividends? Do they do buybacks? Are they smart about it? Do they do buybacks when the stock is at all-time highs? Or do they do buybacks when the stock is down and down and down? We are seeing this right now with Evolution. The stock is down by a lot and the management is implementing a new buyback program. That's a smart way of allocating buyback. So especially for a Swedish company, for Evolution. So this is basically it. First, avoid the debt at all cost. Second, check the track record of the company. Growth, revenue, efficiency, net income, EPS, buyback. 3, you can check if the company has some operational leverage, if they can scale, because remember, this is a channel for long-term stock pickers. We don't want to trade the stocks for 2 weeks. If we buy a stock, we want to invest for the future years. So you want to see the long-term horizon. You want to see the long-term prospects of the company. What is the destination of a company in the next 5 years? Operational leverage will definitely help. And fourth, you want to invest in companies with smart capital allocation decisions, with a smart management that thinks for you, the shareholders. That's very important. Maybe the fourth step is the most important one. If you have a management that doesn't care about the shareholders, you will be disappointed. I'm telling you, you will be disappointed. So you want to be aligned with shareholders, aligned with all the management teams. And if you focus on these 4 steps, you have great chance of generating good alpha, good returns for the long term. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio. Additionally, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you are blocked, if you have any questions, I'm here to help. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need to sign up, no need for your email address. Just click the first link in the description and I'll see you on the other side.